Good morning, everyone. I'm Martha Stokes. I'm a retired buy-side. I am a chartered market technician, which is important because it is a credential from the SEC that gives me a Series 86, which allows me to teach technical analysis with approval and expresses the vast knowledge that I have over many, many years of studying the market since I was started at the age of 12. So I know a lot about the market. I know a lot about the buy side, and I know a lot about what's going on. I also have my thesis on market participant cycle and the market participant groups. One of the things that you always have to remember is that it is not Main Street versus Wall Street or versus. It is 15 different market participant groups, all doing completely different things at different times for different situations, and may or may not be in this chart or not, or may be hidden or whatever. You also have to understand their tendencies and their values and when they buy a stock, when they sell a stock and why, and all of this stuff. It's a lot to understand. But if you don't understand the dynamics of the market participant groups and how they create the cycles of the market, you're always going to be earning less than you deserve. Once you understand the market participant cycle and the market participant groups and how they all come together and make this market the greatest market in the world, you will be able to trade with more confidence because you will understand the dynamics behind it. We are looking at ALNY, which is a recent new addition uh, to the NASDAQ 100. It is a company with about 111% institutional ownership. Anytime there is more than 100% institutional ownership, it indicates that the buy-side institutions and possibly the giant uh, global asset management companies went to that company and purchased shares of stock that did not go to the public exchanges. They bought directly from the company. They made a negotiated contract, bought so many hundreds of millions or thousands or whatever they chose to buy. Usually it's in the millions in a block order directly from the company. The company issued those shares to the buy side institutions or the global asset managers. It took it and put it into their funds. That expands the number of outstanding shares. So when you see a number like, oh, we have 111 institutional ownership, that means that somebody went to the corporation and bought shares directly from it. Does that show up on your charts? No, it does not. Okay, very important to understand. Also, buy side institutions don't day trade. And we're looking at a chart because we want to talk about VWAP today. And they don't trade intraday. They don't trade at all. Also, uh, common misnomer is that VWAP would expose these huge buying sprees of the dark pools. Nah, not true either. They are hidden and their buying is done off of the exchanges in ATS systems that you can't have access to no matter what you do. So what are we seeing here? Who is doing all this with VWAP? We see that VWAP is a very interesting indicator that takes a lot of understanding of what's going on. This is intraday, which means that we don't have the buy-side institutions anywhere on this chart. They can't be here because they're off the exchanges. There's no way that they will be on this chart. So who's on this chart? Well, we have small funds managers. We have lots of them. And then the VWAP will compress and expand because we have hedge funds. And we have hedge funds that are day trading and actively trading during the market things. We also have memes groups that step in, and their numbers can expose the volume changes that you see on VWAP. So we have several different groups here during the day on a 5-minute scale, and we're looking at VWAP, and we're seeing that it has compressions. The compressions do not necessarily tell us the direction it's going to go. However, if you add your Chaikin's EMA on a 5 and a 12, you will have 1 5-minute opportunity to understand that the movement is going to change direction on that compression. So that is very important. So we have this spike to the low, which tells us on this black candle that there's hedge funds or other companies in here, maybe even corporate buybacks. It could be corporate buybacks. It could be memes groups. It could be hedge funds. It could be any number of sell-side institutions, anybody, okay? But not dark pools. But the Chaikin's money flow combined with this gives you a very good indication in a 5-minute scale. This is a 5-minute scale. See right there, 5 minutes. Okay, so we know that it is going to shift and move to the upside with this compression. So when you see this spike to the bottom preceding the action, and it's on a black candle every time, there's that little mark saying, okay, we're going to reverse. It goes shift sideways here because there's some sell side institutions are in here. These are sell side automated orders that are ticking on that, trying to push it up. Professional traders are probably also in here. This is their footprint, very common. 5-minute scale, they trade the market. They're always in the market intraday, trading and having opportunities, trying to push the stock up. So it has another spike here. And it stays down, 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 and then suddenly reverses and moves up. So that was a tricky one for most of you who are day trading. It can happen. So what happened here? We had memes groups that decided to sell, 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 and then it sprung right here. So that was a delayed one. So there, no indicator is absolutely 100%. And that's a good thing for you to learn. So what we're seeing here on this VWAP is compressions are important, but compressions delay the actual event. And so you need to also use Chaikin's or another indicator that will expose hedge funds, corporate buybacks, professional traders action, automated orders from the sell side institutions. You've got a lot of activity going on intraday. And you have a lot of market participants that you have to understand their footprints, what they look like, how they control price when they do take control. Sell side institutions, automated orders are going to take control very dynamically. There, it's automated, which means it's not AI, but it's automated so that it'll ping and trigger a reversal pattern or whatever, all on its own without the floor traders having to do that, because the floor traders are also analyzing all kinds of other activities and things like that. So it's a complex market. It's not Wall Street versus Main Street. Get rid of that idea. It's not there. And you have to understand that if you're intraday trading, you are trading with a group of professionals, sell-side institutions, corporate buybacks, memes groups, and so on. So do you understand how they move price? Do you understand what their candlestick patterns usually look like? Do you understand the volume patterns that will be associated with that particular market participant group? It feels overwhelming right now, right? Oh my gosh, I have to learn market participant cycle. I have to learn about each individual market participant. Yes, you do. Because I know SEC tells me that 98% or 99%, it varies, of all day traders who try to day trade end up losing money and owing margin calls because you can't sell short or intraday trade without margin. And so that causes a lot of problems. Now, the SEC is tightening things up because some brokers have really been whacked by losses from day traders. So you have to be careful. Your chances of being successful as a day trader are very, very slim. You have to be cool. You have to be calm. You have to use the right indicators. You have to understand what the indicators are telling you. You have to be able to be calm under pressure when something is not working with you. And you have to understand the dynamics of each of these candlestick patterns. Who's controlling this rundown? Who's controlling this rundown? Sell-side institutions. You have to know, when you look at this chart, it is full of information. It is so full of information that you need to know, and you don't. And that's why you lose money, because you have no idea who is in control at this time. When are they going to forfeit that control? When is it going to reverse so that you can be in and take advantage of the situations that are occurring? You also have to understand that nothing is 100% in this market. Nothing, nothing. So you have to be aware and be able to manage your risk, and you need to be able to place your stop losses and understand what's going on. Meanwhile, you're in a millisecond transaction activity, and they are front running you because they are trading on the millisecond. Their orders get in ahead of yours, which is on the minute scale, even if your order fills in a second, because everybody sees the orders and everybody sees the things lighting up. VWAP is a good indicator, but it lags. It doesn't show buy-side institution activity at all. It shows all of the professional groups, and there are several that trade the intraday or the activity on that. This is something you need to understand. I know it's a little overwhelming, and I'm over time again. And I really want to share my knowledge and information with you, but this is a big, big subject. Indicators are hugely, massively complex, and the market participant group is where you have to start learning. So if you don't know the market participant groups, if you don't know the market participant cycle, that's where you need to begin your education. I'm Martha Stokes, and that's the topic for today. Thank you for joining me.